In this video, we're going to go through and we're going to talk about the three canaries in the coal mine. Now, I have to admit to you, I get a little nervous here with Apple because if you remember, I drew this little Fibonacci ruler on here, this natural trend line, and this ABC pattern for the Elliott wave. And I was looking for this little ABC pattern to come in here, and we labeled this thing. And if you go back and look at the previous videos where I've taken this into consideration, I'm looking for this ABC pattern, right? And I was getting a little nervous up here as I was coming up and making that C point. I was like, maybe I'm wrong. Maybe this thing's going to turn and go to the moon and just leave me behind because I didn't take that long position. Because if you remember, we tagged that as an X1SA1. X1SA1. So X1S means that it's the first exit point to the short side, or it's the first A1 to the long side. Now, if you remember, the probabilities of an A1 going long, that's not good. We don't generally expect an A1 to pay off for us in this situation, okay? Because this would be an X1SA1 and it's a real low probability. If you remember looking in my book that we have the probabilities table in there, and an X1A1S is your lowest probability of success. And the higher we get up the less, the more likely we are to continue to rally. Now, my question is this B point going to hold? So our goal was to see it come down and get down to this 100% level, which would be the 61.8% retracement, right? I want to see this thing break that B point. I want to see it break below the 50% retracement. You'll notice that this market came right down, touched that 50% Fibonacci number, and zoomed right back up. It broke those blue lights, and that's where I thought it was going to kind of stop, turn, and then fall and come back down to 61.8, at least break a new low, create a little head and shoulders in there, and then give us the next rally up. But we're going to have to wait now and see if it holds this 50% level. And if it does, if it holds that 50% level and goes and starts making, higher highs once again, that may be the beginning of the new trend. But I'm still got high hopes that we're going to get a full ABC pattern in here and get this thing back down to break that 76.4% projection or the 50% level, give us a new low, and maybe even come down as far as that 100% projection or the 61.8 before we start looking to go long once again. So I didn't go long in here, and I was getting a little nervous that maybe I had made the wrong decision and not getting some of these low points. But then we got that big, huge flush, and that kind of set it for me where I'm like, well, maybe we're doing the right thing. So that's Apple, and that's where we're sitting on Apple. I do want to come in and show Amazon. Amazon, if you remember, had really good earnings, and they had that big blast off bar. And I said, be careful with that big blast off bar, because if you look back here in history, remember, just to review, we had a big blast off bar back here, and the market failed and came back down out of that thing. And so I wanted to draw that dollar calculator. If you remember, that's the reason this one's here, is because that was the distance from the high to the low of where that thing pulled back after it had a big blast off bar. So that's why we put that in there. And if it made the same move, it'd come all the way back down to that blue line. That's why that blue line's there. Now we got another area of support right here, a strong area of support that it's not testing. Now it came down and it tested this one here, and it's holding strong. It's like a little ABC pattern that we're seeing reflected up here on the Apple chart. Now, are we going to get an ABC reversal? Now remember, this had good earnings, so the fact that it's pulling back is really mostly sympathy pullback because of Apple. I think that we got a lot of strong support in Amazon. I think Amazon's a good company, and I think we're going to see some additional upside potential. It's wanted to pull back. It's just not done it. So you know what? We could start putting some shares into Amazon and not feeling bad about that. In my opinion, I bought a couple of shares of Amazon, not a lot, but I've started to add a little bit in there into Amazon because I think that it's got the strength to stay up there, and I just wanted to make sure I didn't get left behind. I didn't get heavy into it because I am still waiting for the sympathy. I want to see Amazon and Apple and Microsoft, all three of those come out together and then start to rally at the same time, and they're going to all kind of have that sympathy to Apple. So Apple to me is the yellow canary in the coal mine. So that's the one that's the most important one. So we're going to watch that, and then we're going to come down here, and the next one I want to bring to your attention is Microsoft. And Microsoft, this is another, if we come in here and label this is another right here. This is another X1S. So the first exit to the short side, if you're a short trader and you went short on that red arrow, this would be your first exit for taking profits. And then if you're a long trader, this would be your first entry, your A1. Okay, so your A1 to the upside, but it's your first exit to the downside. We're going to expect and anticipate that this is going to have sympathy with Apple. So we're going to go AB. We're going to come up here. C. Now Apple had the big flush, right? Microsoft did not. So whether this thing gets that big flush or not, or whether it gets a pullback, it might not come down and break this B point. But you can see that natural trend line going up there, and that's what we're going to watch. We're going to watch that natural trend line. Remember, we got the spider web. So I'm going to replace this natural trend line with the spider web. And the spider web is in my book again if you want to learn about the spider web, how to gauge these markets. So we're going to come in here with the spider web, start at the B point, just up the natural trend line. When it breaks the natural trend line, then we're going to watch for it to break the mathematical trend line, and then we'll look for it to come down and break the horizontal. Okay, and then that would bring us into the next leg of the ABCD pattern, going down into the full retracement. If we put the Fibonacci ruler on there from the low to high, all the way from low to high, you can see where we're sitting right now. It came down, touched that 50%, real close, didn't quite touch it. Apple actually touched it, and then they both started to rally once again. Apple had the flush down for this one. We didn't get that yet in Microsoft. No sympathy flush. So we're going to have to wait and see. Maybe Microsoft's a little bit stronger, but I still want to see this thing break as well. It might be the lagger, and it'll have to follow, and I would like to see these markets back down into this 50, at least down into the Fibonacci sweet spot, breaking this, testing this previous low. That's where I'd want to start to be a buyer. Okay, I want to see this chalk and money flow come back and go green, or at least neutral down in here, and then give us an opportunity to start buying once again. And that's where we're going to want to start buying, is at the bottom of these chalk and money flows. That's where you want to start buying. But I don't want to be buying on an X1S A1 because that's the lowest probability, right? I want it much rather be on an X2S A1, and then I could go in there, or we could wait till we get the A2 or even the B1. But those are more conservative. If you want to start getting in a little bit earlier just with shares and start dollar cost averaging in, those would be some great locations. So there's our 3 top canaries in the coal mine. I just want to bring that to your attention. That's what I'm watching. I'm still here, still waiting for these markets to come back into these Fibonacci numbers, fulfill our ABCD patterns, and then we can start being buyers once again. But right now, I'm sitting tight. Before we run off, let's go look at the Qs, because the Qs are kind of a big tell-all too. So the Qs, we might as well look at those, and that's going to be the same pattern right there. It's our X1S A1. So X1S to the downside, if you're a short trader, that would be your first profit zone off that red arrow. And so we got our first profit zone in there, and then we got the rally, the A1, and now we're going to expect the A1 to fail with our spider web in there. So our natural trend line's coming right up there. We're going to look for it to cross over with the blue lights, and then the horizontal. We want to see it break the horizontal and maybe give us a Wyckoff spring coming down in here. And then this is where we can start to be a buyer once again, or looking to start dollar cost averaging into the Qs. The Qs don't often give us those full 50% retracements because all the other markets are too strong. You got your big chalk and money flow, had our big green one here. We just want to see another one of those right down in here, which is our accumulation distribution. If you haven't, if you don't know what I'm talking about here with the accumulation distribution on the chalk and money flow, I wrote an article in the September issue of Pit News Magazine. Go over to pitnews.com. You can get that. I'll put the code in this email, so you can get that for $1, and you can see I did a whole article on the chalk and money flow and how that works in combination with the accumulation distribution model and how we use that with these Fibonacci numbers. It's a really good article, and I would highly recommend you get that. You don't want to be without that. It's going to teach you how all this stuff works together and makes one good 1, 2, 3 knockout punch, as I say in the article. Again, Pit News Magazine, go over there, use the code that's in this email, get it for $1, get the whole year for $1, not just this issue. You get the whole year, all 12 issues for $1. So use that code and go get Pit News Magazine, and you can read about the accumulation distribution model and the chalk and money flow. All right, and we'll see you in the next video.